Hello everyone, this is Jordan. This is being recorded on Sunday, January 26th, and this is another precious metals video market update. In this video, I'm actually going to talk a little bit more about some other markets, specifically the S&P 500 and commodities. You can see here in this chart, at the top we have the S&P 500. We have commodities in the middle, that's the CCI index. Then we have GDXJ, which is the junior gold stocks in the US. That's at the bottom of the chart. Now, what we're seeing here is since the summer of 2011, we've seen a negative correlation between hard assets and US equities. The S&P 500 has obviously been a fantastic performer since the summer of 2011. Commodities they began a bear market at the end of Q1 2011. They've continued to trend down. Same thing with the gold stocks as evidenced by GDXJ. But in the last couple of weeks, we started to see some turmoil in U.S. equities. And the CCI commodities on Friday actually closed at a 2.5-month high. So these are some things to keep in mind. And with respect to the gold stocks, about 10 days ago, we publicly came out and said that the bottom was in for the gold stock. So we could be seeing the start of a potential major turn here in various asset classes. Now, with respect to the S&P 500, we know that recently there's been extreme bullish sentiment, but the market has kept going up. Surveys like Investors Intelligence, the NAAIM, which is the National Association of Active Investment Managers, as well as the Merrill Lynch survey, which comes out every month, that's showing that participants and respondents have been extremely bullish on U.S. equities. But as I said, the market has kept going up. One thing to keep in mind as far as telling us when is the next bear market going to begin, one thing that will lead price action, and that's breadth. And I show a couple breadth indicators there at the top. At the very top, that shows the percentage of stocks that are trading above their 150-day moving average. And then in the second row, that's stocks, the number of stocks, I believe, on the NYSE, which are making new highs. Now, I smooth out those indicators with a 10-day moving average because they're very volatile. Now, as we can see, there are some slight divergences there. Both indicators peaked in the second quarter of 2013. And one important thing I'm going to be looking for, if you look at the very top indicator, I want to see if that downtrend continues. And if we see that indicator fall below that red line, that's going to be a serious breakdown in breadth. So we're seeing some initial warning signs here. They're starting to grow a little bit, but we have to keep an eye on these to let us know if we're going to see a full-fledged cyclical bear market or if we're just going to see a correction. Now, with respect to the gold stocks, this chart here is of our top 15 index, which is an equal-weighted index of 15 of our favorite companies. There's a couple large ones in there, a couple of small exploration plays, some development plays, and also some junior and emerging producers. And as we can see, this index bottomed at the end of June 2013. In December, it made a higher low, and since then it has moved quite a bit higher. This index would have to fall 32% just to test that June low. And, you know, when you get this large and long of a bear market, and it's just very difficult to see a new low coming. I mean, at the end of last year, in Q4, I should say, you had forced selling, you had fund redemptions, you had tax loss selling, and you had sentiment that was at 10 to 12-year lows. Given all of those things, you'd expect the market to maybe make a final plunge. It tried to do so in December, but it made a higher low on this index. It made a higher low on the Toronto Venture, and the Toronto Venture actually has closed at a 9-month high. So looking at these things, I strongly believe that the bottom is in for the gold stocks. And in addition to that, we could be seeing a major turning point with respect to hard assets and financial assets. U.S. equities are looking toppy here, and commodities may have hit a major bottom. So these are things to definitely keep in mind as we move forward here. And you can visit our website at thedailygold.com. You can sign up for our free newsletter there. We have an opt-in box on the right. And also consider our premium service. We focus on precious metals, and we also give a monthly update on global markets and other asset classes. Thanks so much for watching.